In a day of major market moves, Wall Street soared on Tuesday amid hopes of an interest rate cut by the US Federal Reserve as tech giants led charge. The Dow Jones jumped over 400 points, while the Nasdaq surged by 2.4%, driven by tech giants like Nvidia, Microsoft and Apple. The S&P 500 also climbed 1.7%, now less than 5% below its July record high. Meanwhile, Starbucks stunned the market by replacing CEO Laxman Narasimhan with Chipotle's Brian Niccol, boosting Starbucks stock by over 24%. Narasimhan's immediate departure follows struggles in key markets like the US and China. Wall Street is optimistic about Niccol's potential to turn the company around. Despite beating quarterly expectations, Home Depot lowered its full-year sales forecast due to weak demand and high interest rates. The retailer projects a comparable sales decline of 3% to 4% as economic uncertainty weighs on consumer spending, with many delaying home improvement projects. Google introduced new AI features, including the Gemini assistant, aiming to outpace Apple in the AI race. The enhancements are part of Google's strategy to grow its AI subscription service, with the Pixel 9 series phones showcasing advanced AI capabilities through upgraded hardware. Let's get more on this now with Tim Waterer. He's Chief Market Analyst at KCM Trade. Welcome back to the program, Tim. Now, Wall Street has bounced back quite quickly from last week's sharp sell-off. What's boosted investor sentiment?
Good to be with you. Yeah, quite the contrast where markets are now versus this time last week when it was full-blown panic mode. I think we can put it down to two main reasons. One was the comments by the Bank of Japan Deputy Governor last week. So we know that a lot of the panic last week was driven by this, unwinding of the short yen trade. So the Deputy Governor, he came out and basically reassured markets and calmed them that, the BOJ probably won't be looking to hike rates again while we got this market instability. So that put a stop to that great unwinding of the yen carry trade, and that settled down markets. And the other, of course, is the US economic concerns. They've kind of receded somewhat. Now, we did get some better services data last week in the US. And then, of course, we had some softer PPI figures last night as well. So some of those recessionary fears we had last week, they've dissipated. And that big unwinding of the short yen trade, that's slowed down substantially as well. So markets are certainly much more of a glass half full approach this week compared to last week.
Right, now some seem uneasy about the speed of the rebound over on Wall Street. Why could that be a concern?
Yeah, that's right. We have had a big rebound, as you mentioned. So the US equities, they've made up all of the ground that they lost, in the aftermath of that August 5th sell-off. Now, I can see why markets have been, in rebound mode since that time because of the reasons we just talked about. But I think what last week's volatility did highlight is the fragility of the market. The Bank of Japan, they didn't hike rates by that much, really. It's 0.15%, and that was enough to cause chaos, essentially. So I think it's, created some concerns, I guess, moving forward that we could be in for some more volatility when we have different central banks around the globe on different policy paths, with banks such as the BOJ looking to raise rates and others such as the Fed looking to cut rates. And that differential creates quite a large, change of flows between different markets. We saw that with the repatriation of the yen last week. So I think, remind us of the fragility, and it's something to watch out for moving forward, is a lot of these yield differentials in the bond market and how that can influence the equity markets as well.
Right, and we have more data due out in the US later in the day. Inflation data is due out. What are the market expectations, and how could it influence the Fed's next policy move?
Yes, that's right. All eyes on the US CPI tonight. So in terms of expectations, we're looking at around about a 0.2% increase for July on a monthly basis, with the yearly level remaining around that 3% level. I think if we do see those figures tonight, that'll be enough to please markets from a risk appetite point of view. Now, we did get a bit of a preview last night, potentially, in terms of the producer prices. So they were a little bit softer. If CPI, so consumer prices, if they follow suit tonight, that could bode well for perhaps a further gains in equities, because right now there's a bit of a toss-up as to what the Fed could do in September, 25 basis point cut or 50. So I think in terms of what side of the ledger the inflation figures come out tonight, that'll shift the odds one way or the other, and we could get a better idea of what size of a cut the Fed may be looking to produce come the September meeting.